Hello, everyone. Welcome to Cryptonized. Today, I've got a guest who's actually tokenized a real estate project. And you worked with DigiShares, so we'll get into that in just a second. My guest is Sohail Hassan. And before we jump in, Sohail, can you kind of give us a background on yourself?
Sure, absolutely. Well, thanks, Mark. It's a pleasure to be here with you this afternoon. My name is Sohail Hassan. I'm a managing partner and principal at Market Space Capital, and we're a private equity real estate firm headquartered out of Houston, Texas.
Excellent. And how did you get to be knowledgeable or into the kind of the tokenization industry? And tell us a little bit about that story first.
Sure. My background has always been kind of in technology and just understanding where the market is going, and particularly the technology of blockchain, right, that powers cryptocurrencies like Bitcoin and Ethereum. That's kind of where the interest was initially drawn to. And that obviously morphed into how we can apply that into everyday, parts of our lives, such as real estate, of course.
Excellent. And but what made you? Were you a crypto guy? Were you? What made you kind of turn the corner?
Yeah, I'm a crypto guy from the beginning, right? And then started watching in terms of what the growth was happening in the market. Got involved in some initial coin offerings early on, if you recall, during the frenzy of those
Oh yeah,
days. So that's
I've done a number of them.
yeah, there you go. And a number of them did very poorly. Some of them did well, right? And from that, I started understanding the different components of the market. Now, I'll tell you, Mark, our journey into tokenization was very much, one in which we took a traditional route, right? Where when the partners of our companies came together, we understood the benefits and the potential of blockchain technology, but understanding that it was still in its infancy at that time, we didn't want to, kind of go against what and do something completely that we had no understanding of. And so we took kind of a wait and see approach and acquired, properties through a normal acquisition process with the idea that one day we would be able to go back and potentially tokenize it, through using blockchain technology.
Okay, so you had some comfort with it. You wanted to explore using it. Did you get any pushback from LPs at all, and some of your investors? What were they saying?
No, so I think, the way it started is first and foremost, we probably dedicated a good year and a half, 2 years to researching the topic, right? So our firm really kind of was formed, even though the partners have been doing investments together since 2011. It was formally put together in 2017. So at that time, we were still very much in the infancy stages of, where blockchain was. And so once again, we decided to take the traditional approach and just build up our assets under management. So this started by, acquiring, retail shopping centers, office buildings, and eventually we, seeing where the market was going, our investment thesis evolved into taking a focus on multifamily. And so we have 100% today, 100% focus on the multifamily part of the business. We're completely vertically integrated. And, we wanted to take the opportunity of, after spending all this time understanding the different components of tokenization. And as you can imagine, this impacts almost every part of the business model, everything from the legal components to the taxing components. And so, initially we spent a lot of time and money, might I add, in doing the proper due diligence behind this, right? And understanding the different components, then we realized, okay, let's take one of our ground up development projects in Dallas, Texas, and basically set that project up to where we do a case study on what the benefits of tokenization would be. Now, it's important to understand, Mark, that there's a distinction here that we actually raised the capital for this project through traditional means. So we took LP investments of a minimum of $50,000, and we raised almost $9 million of capital. Now we went back and took that $9 million, and the idea was to tokenize all of those $9 million of limited partner shares. And so in doing so, we developed a communication strategy. And that communication strategy, we basically outlined to our investors and brought them on our webinar. And on that webinar, we invited, some of our legal counsel who specialize in blockchain law, We brought in our CPAs so that they can ask questions on how this would, impact their K1s and tax returns. And basically, we were able to, field all of those questions. And so, by developing this communication strategy, we were able to convert about 80% of those investors. Again, 20% just said, they don't care or don't bother me. But the remaining 80%, we went through and we actually converted all of their ownership shares into tokens. And again, using the the motto for us was like trying to keep it as much as possible to the traditional real estate process that they're used to, which is, of course, just signing a subscription agreement. In this case, we are providing them a wallet, a digital wallet, similar to like a Charles Schwab account. And in that digital wallet, we're depositing these tokens. And of course, the tokens, one token equals $1. We, of course, use, a service that basically has it to where it pegs it to a fiat currency. And so in doing so, we basically issued 50,000 tokens to an investor who made a $50,000 investment. Now those tokens, Mark, are restricted for the first 12 months, as you may know, but after 12 months those tokens become unrestricted and you're allowed to basically trade them onto an open market. So the benefit is twofold, right? First and foremost, you're providing liquidity in what is otherwise inherently an illiquid market, right? You have the ability,
Yes.
Mark, now not only saying that, okay, man, I need $50,000, you have the ability to immediately sell those 50,000 tokens on the secondary market. But more so than that, Mark, there's also the ability for you to fractionalize those tokens. So you can say, hey, let me take 5,000 out of the 50,000 tokens and put them onto this secondary market and basically trade them. And somebody in Japan or UK or China, they essentially have the ability to immediately come and buy and make you an offer on these tokens, right? So it opens up the world for us in terms of your pool of investors. But in having the ability to fractionalize it, you are also lowering the high ticket cost that is otherwise associated with entering in these investments. Because Mark, someone can come and offer you, $5 or $150 or $1,000 for your tokens, and you have the ability to trade them, and you're essentially pegging the value at what somebody is willing to pay in that market. So that's where we stand today, Mark, and that's kind of how we got to the journey of tokenizing our first asset.
Okay. Well, wonderful. I'm glad. Now I'm going to ask you a bunch of questions that I get all the time. First of all, most of these LPs are, I would guess, elderly people, or maybe not. Maybe I'm wrong. How familiar or how comfortable were they when you mentioned, "Hey, we're giving you digital wallets, and we're going to deposit it in a digital wallet, and you have to figure out how to use it, or maybe you train them on how to use it." How did that discussion go? Was there pushback? Was everyone's like, "Oh, great! Now there's the benefit of figuring out how to use a digital wallet, which isn't hard, folks. Is worth the fact that I could trade this if I need to, if multifamily does what office is doing now."
Absolutely. So, Mark, to answer your question, again, 80% of our investors basically converted into this tokenized format. And I would
So it
say,
was a choice.
yeah, by choice, right? And then
Okay.
it is a choice, right? If they didn't want to do it at all, then they don't actually have to go down this route. But about 80% of them chose to, pursue
Why?
this, right?
Why they do it?
It's simply because
Why?
the value proposition from our end is that we're giving you liquidity, right? And that
Yeah.
otherwise did not ever exist. So we're kind of doing this for them, right? The cost that we spent with DigiShares to mint the tokens, the cost that we spent with T zeros to put them on this platform, all of that basically we did in order to give them an option in terms of liquidity when, as I mentioned, otherwise it doesn't exist. In a normal subscription agreement, Mark, that you signed with me, I mean, your capital is essentially locked into that real estate investment
Yeah.
until there's a capital event, right? Until we make distributions or we sell the property. So aside from that, here, this is kind of giving investors more option to do what they want with their capital. And so that's one of the value props that the reasons why they did it. But I will say about out of 80% of those, 50% of those were immediately very savvy with it and, had been read a lot about cryptocurrencies such as Bitcoin, and that was kind of the biggest factor that you have to overcome, is that immediately when you say that, that's what they think that you're engaging in. And we have to kind of make them understand that it's actually the technology behind those cryptocurrencies that is allowing us to do what we're doing, but it doesn't have anything in particular to do with Bitcoin.
I'm glad you said that. That's what I tell everybody on almost every show is that yes, crypto and security tokens use the same tools, but they're not the same thing. One's backed by assets, the other is backed by Peppy Coin. So they're completely different, using the same tools, but both offer liquidity. So let me ask you this. How did you justify the cost of creating these security tokens for people without any obvious payback? Are you hoping as well that there's an appreciation in the tokens because of this liquidity and that you benefit from there? Because I'm still struggling with why you would do it. I know why I would do it, but why you would do it, because it only benefits your LPs, not you, at least initially.
No, it does. Let's walk through it, Mark. Okay, so let's say now I have a property in Dallas. I'm building. It's approximately $66 million. It's a 5-story wrap, 250 units, and it has a podium-style parking garage. And it's costing us roughly, as I mentioned, $66 million, or let's break it down to 262,000 ish per unit. Is kind of what we're building at. Okay. So those investors who bought in at the valuation of that $65 million, that's what we're pegging each token to at $1, right? Now we have an appraisal showing that when this is stabilized, it's going to be worth $78.6 million. Okay, so that's kind of what we're working with, right? Now, those investors who invested, again, the value for them that at $1 at $66 million, at the value of what it's stabilized and appraised is, it's actually going to be closer to $3, right? So why would they? And this is one of the benefits of owning real estate, is because there's 4 ways that investors make money in real estate, right, Mark? The first way is through cash flow, right? Distributions that they're getting from rent that we're collecting. The second way is going to be through multiple refinancing scenarios. The third way is, of course, going to be through depreciation. And the fourth way is, of course, through appreciation. So taking all 4 of those into consideration, we have our appraisals done on a quarterly basis. They're updated on a quarterly basis for the properties. And we do that because we are trying to peg a value. And that value is important because that's what backs into the value of each of these tokens. And so today, we're 40% through the construction process, Mark. And so, we know that the value of those tokens have inherently increased, right? Because the project value has increased. And so based on that, and based on the net operating income of the property on a yearly basis, we back into what the value of the token is worth. And so those investors and people who typically invest in real estate know that it's not a quick thing where you invest, you're in and you're out. In order to see the real benefit of it, you have to stay for that 3 to 5 year cycle. And so that's the same thing here with our investors. So, I would argue that there's no incentive for them to sell so early in the project because there's so much meat left on the bone for them to take advantage of. And in this particular case, we've had one transaction that's taken place that essentially sold an investor who had 50,000 tokens, sold part of those tokens 16 months later at $1.32, basically denoting a 32% increase in gain for him in 16 months, right? And so that's kind of the idea of the way that this structure works on a real pragmatic basis, if that makes sense.
And do you make more money as a result of that process, or do you attract additional investors because they know they can get out? So is it easier to?
The latter. The latter. So let me, in your initial question, you're asking like why we do this as a sponsor. Now, of course, this is on the front end. On the back end, we see a number of ways to be able to take advantage of blockchain technology to simplify the process. And that's part of this, right? It's not only for the investors, but for us to understand what the different components of this is. So right now, when we make distributions on our value add deals, Mark, I mean, it's a kind of a nightmare process. We have to confirm banking instructions. Some of the investors are abroad. I mean, it's a whole process. Imagine in the future where I can eliminate banking institutions entirely, and I'm just able to issue tokens directly to their digital wallet. Now, another thing to clarify, Mark, is that digital wallet exists inside their investor portal with us. So it's not like it's an extra technology that they have to master or an app that they have to download. That's actually what we worked with DigiShares with, because once now we've done this process, we have to reflect that for the investors. And there's no existing product out there that gives you the ability to do that. So we wanted to work with DigiShares, but DigiShares product is very heavily like tokenized, right? Like our real estate investors aren't going to understand it. So we spent 6 to 8 months with them on creating a investor portal that does exactly that. It looks and it feels like a real estate platform, but it's backed by blockchain technology and it has the ability to reflect your tokens.
Love it. Love it. A few more questions. Are you giving cash flow to the LPs at this point? And if so, are you doing it on chain?
No, so this is a ground up development project. So there's a construction time.
I mean, when it becomes, yeah, but when it becomes live
Yes.
and fully functional.
Yes.
Okay. So will you distribute it through the blockchain because that's an easier process, or will you do it the old-fashioned way, just mail them a check?
No, I'll do it through the blockchain. So that's one of the benefits from our end, right? Again, is we see that we see doing quarterly updates, recording that property information. We can record on the blockchain. So what it does is it allows us in the future when people are doing due diligence on the property, it allows us to just be able to open something for them that they know is legitimate, right? And then so those are kind of some of the clear benefits from our end as a sponsor for doing this. And then, of course, what you mentioned, we are only one of the only sponsors that are offering our investors the ability to have this liquidity option, whereas others don't. So there's a competitive advantage there, but it basically also opens up our pool of investors as well, because now, Mark, if you have $5,000 or $10,000 to invest and don't really have a platform and know what you want to invest in real estate, you can now come onto the T0 platform, search our Myra token, and immediately be able to make an offer and start buying and selling.
Excellent. I mean, the other thing I like about this is the transparency of it all, and investors, LPs are able to see what's going on with the tokens. So there's less transparency when you're doing it a traditional way. A lot of transparency, especially when 80% of it's distributed, to see how people are feeling about the project. Is there a lot of demand for it? Are people selling? From an LP point of view, I think it's amazing. Have you thought about crowdfunding some of it next time, or is that like just too much?
No, I think that's what the next step in this evolution is for us to be able to actually go out and raise capital in this format, which I think the market's coming around to, Mark. I mean, with the collapse of FTX and things like that, we've gotten kind of a bad name or a branding in the market. But for those people who know, they know that the market is still maturing. So I think that's where the next step of this goes for us, Mark. Is now we've seen how it works from actual minting of the tokens to putting them live, trading, all of this. We've seen these different components working, and now it's the next step would be for us to actually start raising capital through it.
Got it. Okay. Any lessons learned? Other real estate developers or owners watching this. What are the lessons learned? What would you have done differently if you could rewind time and start again?
Well, I would say that through this entire process, this case study, that was the purpose of this, right? It's for us to learn our lessons. And, I don't think that, from a standpoint of communication strategy, all of that, we were successfully able to complete that. I think the biggest lesson that we're learning right now is that there's a very low volume of trading, Mark. And so that could be indicative of two things, right? One is that again, investors aren't necessarily interested in trading their tokens because there is already, there's so much meat on the bone for them to be able to capture in terms of value later through their tokens, that it's not in their best interest to sell. So we're not really seeing that transaction take place. But secondly, it also kind of shows you that the projects we believe that are prime for this are development projects, because there is that gap between the value that you're investing in construction and the value that you're creating in terms of the stabilized asset. Whereas in a value add acquisition that we do, because there's not as much, right? We buy it for a certain amount. We do interior and exterior upgrades, but the value is not going to be increasing dramatically. And because of that reason, we think that the ground up development is an ideal candidate for us to be able to do a tokenized format.
Well, I could see though investors that are just interested in annuities or some sort of cash flow. You buy enough of these at $50,000 a pop, and you're getting cash flow from each of them, even if it's just 10% a year, would be very valuable compared to what they're seeing in other parts of the investment world. A few more things came up as you were talking. The first one is, have you ever thought about issuing more tokens than the property's worth? Is that even a thing that you could do? Let's say the property is worth 66 million and you issue you issue 66, but you keep 20. Would that even be a thing, or would that be considered?
No, so Mark, just remember that we are regulated by the terms of the private placement memorandum.
Mm-hmm.
So whatever we had put in the PPM in terms of the amount of equity that we can raise, that is what we are limited in terms of being able to tokenize. So anything above that, we are not able to. It's restricted in terms of what could be trading, because it changes the ownership structure, right? The tokens represent exactly the amount of owners in the project. So anything changes there, it messes up the entire cap table.
Yeah. Okay. Great points. And then, what is everyone saying within the company? Is this going to be the standard procedure going forward with any investment, or is it still an experiment that you're waiting to see what the end result was?
Well, I would say no. I think we're still seeing what the end result is, simply because we're not, and the construction project isn't completed yet. Once it's done, it's operating. Over the years, we're really gonna see what the impact is on the tokenization component. But as of right now, we're not really seeing the value, right, that we would expect to see. But that's simply because, again, you have to wait for the life cycle of the entire investment.
Yeah.
But moving forward, we would do this at a much reduced cost, right? I would say the entire cost all in for a sponsor should be about $60,000, which includes a listing fee, attorney, CPAs, all of this. So then the question really begs, is it worth to make that investment in order to be able to see the returns on it? And for us, it's yet to be seen, because we haven't gone full cycle on the investment yet.
Yeah, I think there's other things that you could do, whole different discussion, to increase the value for yourselves. But anyway, this has been fantastic. I know a lot of people watching this have been waiting for me to do something like this, to bring on somebody who's actually gone through the entire process. I know the entire life cycle hasn't been completed. When is the project going to be done?
So around Q2 of next year is when we're looking to have the project completed. Q2, Q3.
All right, then we'll probably call you back up and have you do a quick update. But with that, we're going to end the show here. Sohail, how do people get a hold of you or your company, or how would you like people to reach out if they have any questions?
Sure, yeah. You can reach out to me at marketspacecapital.com, which I would encourage them to visit. We do a lot of white papers, so everything that we have learned and the knowledge that we have gained going through all of this, we make available on our website. We've created an entire strategic plan to pursue tokenization for our company, not only on this asset, but other assets as well. Taking into consideration case studies of others, people who have tokenized their assets. So all of these resources are readily available on our website, or you can reach out to me at sohail@marketspacecapital.com, and I'd be happy to share these resources with you.
Excellent. Thank you so much. I'm bringing you my latest recommendation, and that is Tetragard. Tetragard is a basket of tokens, like an ETF almost, that's got Bitcoin, Ethereum, PaxG, and a fee token called Quadrant. All wrapped up. You buy it in one spot using Ethereum. The link to buy is right here. And by holding this basket of tokens called Tetragard, you get paid rewards. just to hold the top tokens in the world. You can't go wrong. You'd be crazy to buy these tokens separately and not get anything for them when you can just do it all at once in one spot and get paid rewards as long as you hold that basket of tokens. Again, Tetragard, you won't go wrong.